biggest mistake that you'll see working with a human being and their money is just simply they have good intentions, they have goals, they have things that they know that they're supposed to do. And it's just really, really hard to actually do it. And by the way, this isn't just specific to the world of financial services and money and financial goals. This applies to all areas of life, right? It's why one of my favorite quotes is, if all we needed was information, we'd all be billionaires with six packs, because we have no shortage of information or education or knowledge at our fingertips that tell us what we need to do. And so the problem that most people fall into is that it's just really hard to do the execution part. Right? We don't have an information problem. We have an execution problem.
Brendan Frazier, hook 'em horns. How about them horns, huh? That has to hurt a little bit, just a little bit.
That's a bold start. Start there. What's the shortest episode you've ever recorded?
Ooh, and that's a wrap. Yeah. No, when we talked, I think it was before the Texas OU game, and you're an OU fan. We talked about that game coming up, and maybe that's a way we could start today. So I took advantage of that. So I can't say that I've been terribly pleased with the Horn season since then, but at least we won that game.
I think that's what they call, one of the terms for it is a low blow. Yeah, you know what? That's okay though. Not the first time it's happened. The problem is it doesn't get any less painful for whatever reason. Like you think you get used to it, and it still just more or less derails my entire day whenever we lose to Texas. But
yeah, you take it emotionally, huh?
Yeah, a little too much. Yeah.
Well, that's very apropos, because we're going to talk about emotions and behaviors today, right? You are Chief Behavioral Officer at RFG Advisory. I don't know if I know that there are that many positions like that. Are there many folks in a role like yours?
From my research, and when I use that term very loosely, so basically my searching around, and from a couple other people that were also interested and wanted to know, and I told them, hey, I've only been able to find one other person, but see what you can find in our industry. By the way, it's a little bit more it's not common. It's a little bit more common though outside of financial services, but there is one other chief behavioral officer that we can find and track down. His name's Daniel Crosby. He's the chief behavioral officer at Orion. He's a good friend. He's written a bunch of great books on behavioral finance and the emotional and psychological aspects of money. And so anyways, there's at least one other person out there with the same title.
Yeah. Well, I think it's a fascinating line of research and I guess analysis and whatever you call it. But early in my career, I read up on a lot of that. We would prior firm do advisor presentations to help them kind of understand that element of investor behavior, things of that sort. How did you come to this field and find a way to dedicate your time in behavioral finance?
Yeah, so there's two versions of the story. There's the longer version that goes on, could be a whole episode on its own. There's a more condensed version that most people would probably rather hear. So basically about 8 to 9 years ago, I was in a role, had a job where I got to consult with advisors around the country, right? So the cool thing about that is you get a lot of reps, you get a lot of knowledge and wisdom because you're talking to advisors over and over again every single day. So I got to learn a lot about what works, what doesn't, what they're experiencing, what they're dealing with, what it's like working with clients, what it's like running these different variations of businesses. And one of the things that would come up over and over again that I started noticing was something along the lines of, Brendan, I feel like I'd be better off with a degree in psychology than I would finance or economics or anything numbers related. Or the other version of that was, Brendan, sometimes I feel like more of a therapist than a financial advisor. And this would come up over and over and over again, right? It happened a lot. I started asking like, how important is it? And it was like the majority of people I would ask would be like, it's at least as important as the number side. Some would say, oh, it's probably even more important. So then the next thing I knew to do was to go, okay, if we think it's that important, then I got to ask you this. What do you do about it, right? Like you can go get trainings and designations, CFP, whatever training course and designation you want for technical knowledge, right? The actual financial planning and numbers aspect of the job. But I want to know, hey, what are we doing for this idea of like, how do I be more like a therapist than an advisor if I need the psychology degree? Obviously, we don't want to be therapists, full-blown therapists and psychologists, but what are we doing for that skill set? And the most common answer I would get was, I read a book. And it was like, books are good. Books are good. I have nothing against books. I like reading them. I've got lots of them, but I just feel like we could be doing better if we all believe and say that it's that important, right? So fast forward a little bit, I ended up starting my own business, my own practice, building and growing that, working with clients. And lo and behold, believe it or not, I find myself saying, man, I feel like more of a therapist than an advisor. I need a degree in psychology more than I do any type of training around financial planning. And so at that point, I thought, all right, I'm not the only one. I think there are other people that are interested in not being full-blown therapists, but they want to know, like, hey, how can I sharpen my skills on what I've come to call the human side of advice, right? So that went into, I launched a podcast called The Human Side of Money. We bring on experts on behavior psychology and communication inside and outside the industry. We brought on advisors to learn how advisors were doing it. I would go back and experiment and put it to use in my practice when I was working with prospects and clients. And so fast forward a couple of years into doing that, mainly through the podcast and putting out content on social media and stuff. And fast forward a couple of years later, and I started getting inbound requests from advisors saying, hey, will you teach me on this? Are you going to coach on this? Will you come train our people on this? And that's when I kind of went, I thought people are interested, but I didn't know for sure. And that sort of validated it for me. And so I just leaned into that fully and said, all right, I can't run two businesses. I can't do this and work with clients while also trying to be a decent dad and a decent husband. That wasn't going to fly, right? There's just no way. So I leaned all in and said, all right, I want to promote and help advisors get better at the human side of advice. And so I started building out coaching and training programs for that, doing speaking, all that kind of stuff. And then that's when RFG came calling and said, hey, Brendan, we really believe that the future of this industry is going to lean, slant, and angle towards the human side. And we believe it so much that we want to invest in it. We want to pioneer this role in the industry, have somebody come and be the chief behavioral officer. So for our advisors, and here we are, a little less than 2 years later, and still doing it, still going strong.
That's really great to hear. I mean, when I was looking at some of this stuff or talking about it over 20 years ago, I think it was still relatively novel, and advisors were learning about it. And so it's really great to see you making a career and a pathway out of that, and continuing the message around, what emotions investors deal with and what they contend with. And it's funny, kind of one of the things that I had thought about over the last, 20 years, when we've had some periodic downturns in the market, I would ask advisors, are your clients calling you worried about stuff and mood? More often than not, I actually got the answer was more like, no, they're all right. They're fine. I'm like, okay, maybe investors are learning. Maybe investors are learning to buy and hold and kind of relax. So I think maybe a lot of people have heard of behavioral finance and the concepts, when you explain them, make common sense, but you still find people and advisors kind of tripping over themselves when the pressure's on.
Yeah, I mean, I think that's the hardest part, but it goes back to what I said earlier, where you go, I know that this behavioral aspect, this human aspect is important. Like I said, right? Like nobody denies it. These advisors all said how important it was, but they go, like I said, they don't want to be, nobody says I want to be a financial advisor, and then I also want to double major in therapy, right? Or they don't go, I want to be a financial advisor who's also an amazing life coach. I mean, like most of us just go, hey, I want to know the most practical, applicable ways that I can bring this human aspect to life in my practice and my processes and in my conversations without having to go get a major or a degree or go to class in school in psychology and therapy. And so that was that was the quest. That was the impetus behind all this. That was the mission of the podcast and all the coaching and the training was, okay, how do we take what exists out there around skills around communication, what we know about behavior change and psychology and communication. And that just so happens the answers and the ways to do it, they're out there, they exist. They just don't exist within the field of financial services. You have to go look at the field of, like, again, communication skills. You look in the fields of therapy, you got to be a good communicator to be a good therapist, hostage negotiation, behavior change, right? The field of medicine has done a lot of work around changing behavior. And so there's a lot of information and models and examples that are out there. And so the idea behind the podcast and the coaching and the training was, how do we bring these back into financial services in the most applicable, practical way possible so that you could know how to do this and you can do it easily, again, without having to go get a major in psychology or therapy.
Yeah. Do you find that some of the best advisors were perhaps people in a prior career that were coaches or teachers and things of the like? When I started, in my career, I started as a financial advisor for a very brief time, but I noted that some of my peers who had come in with some prior work experience as a teacher or a coach brought something different to the client experience, maybe a certain level of empathy, this desire to teach and coach that I thought fed very well into the tool set of a financial advisor. So,
yeah, I think that makes sense. I think there are what we know are elite skills that make a great financial advisor. And it just so happens that there are certain professions, certain careers that develop those skills, that skill set, so that when they move into financial advice, when they move into financial services, it naturally translates into better results, right? You gave probably the two perfect examples. One is being a teacher, right? So when you're a teacher, you have to learn how to like listen. You have to learn how to communicate, and you're constantly going like, "Hey, how can I communicate in this topic, this lesson, in the most effective way?" Communication is probably the number one skill set that an advisor can have, and the good news is you can develop it, you can hone it, right? But the same thing goes with coaches. The best coaches out there, they're the best at relating to their players. They've got to be great communicators. They've got to be able to know what the players need when they need it. They need a level of empathy, right? And so you're right. We could look at it one of two ways. We could say people that were coaches or teachers in a past life became great advisors, because that's true. I think the way I like to look at it is we can distill it down and go, hey, there are skills and traits of elite advisors that we know make them great, and we know why it makes them great. And it just so happens that those skills were developed through a different career and a different profession. But that doesn't mean that you're doomed if you weren't a teacher or a coach, right? But what you do is you go, okay, well, let me learn what those skills are. Let me distill what those skills are, and then figure out what I can do to hone and develop the same skill set.
Yeah, makes sense. What do you think it is that investors do that kind of gets in their way, or what behavioral aspects at a very generic level or general level are they prone to, behavioral mistakes are they prone to making with their finances?
Yeah, I mean, I think the number one, the biggest thing that we see, the biggest mistake that you'll see working with a human being and their money is just simply they have good intentions, they have goals, they have things that they know that they're supposed to do. And it's just really, really hard to actually do it. By the way, this isn't just specific to the world of financial services and money and financial goals. This applies to all areas of life, right? It's why one of my favorite quotes is, if all we needed was information, we'd all be billionaires with six packs, because we have no shortage of information or education or knowledge at our fingertips that tell us what we need to do. And so the problem that most people fall into is that it's just really hard to do the execution part, right? We don't have an information problem. We have an execution problem. And it's hard to do the things that you're supposed to do and you want to do them the least. And it's hard to avoid doing the things that are detrimental to you when you want to do them the most. So for example, it's really hard to save more money, which you know that you should do, if you don't want to, because it means that you're not going to be able to go out to eat with your friends every other week. Or it's really hard to avoid doing the things that are detrimental when you want to do them the most. What does that mean? Well, what that means is it's really hard when the market's tanking and plummeting and it feels like there's no bouncing back. It's really hard to do what we know, to this point anyways, has always worked over time, which is stay the course, stay invested, because the market's always bounced back. Right? Yeah. But in the moment, it's not easy. You know what you're supposed to do, but it's really hard to actually follow through and do it. I mean, we're human beings at the core. It's a behavior change problem, a gap between knowing what we're supposed to do and then actually doing it. And I mean, there's people out there that refer to it as, like, believe it or not, the knowing doing gap. Right.
Huh. And do you think a lot of that comes from past history, experiences with money, as we talk about finance, in the realm of finance? Other things, I don't know, do you see something more prevalent when it comes to money, that it's maybe it was their family's past history with money that has kind of really influenced the way they approach it, or something else?
No, the most common ones are just like the core tenets of money, which I just mentioned, which are, it's really hard to save more when you want to save more. That's one of the things that we see come up a lot. The classic one is always staying in or needing to stay invested when you want to sell out when the market's tanking and it's plummeting and you're worried that it may never come back. That comes up a lot. When we go ask advisors and we say, hey, what are the things that it's hardest to get your clients to do? If we look at it through that lens, estate planning almost always surfaces to the top. Like I think 33% of Americans have a will. And it's like, well, it's because it's not a fun process. You can get away without having it and nobody wants to talk about death, right?
Yeah.
So that's another big one that pops up. But, I mean, it also, you can look at it demographically and say like there are certain clients, just because it's not as common doesn't mean it's not any less detrimental or important, but like overspending is a real thing too. And that's what goes into your point, or oftentimes overspending is something that comes back to a script or something that we believe about money that oftentimes forms in our childhood. Most of our money beliefs form when we're like 6 or 7 years old. Not always, but that's where a lot of them tie back to. And so you find that people that are overspending today, it's a direct result of something or an experience that happened in their past, like 20 and 30 years ago. And it's just really hard. Nobody teaches us this stuff, by the way. And so it's really hard to even grasp the idea that the 7-year-old you is responsible for the 50-year-old version of yourself making irresponsible financial decisions.
Yeah. So do you think it's possible? Because part of what I heard earlier on in one of your explanations is it almost sounded like clients had to be open and ready to make that change. They know what they needed to do, but it's so hard to do it. It's like you almost had to hit rock bottom in whatever framework that is before you decided to make a change. Like if I put it in the world of working out and being healthy and being a healthy weight, I had to get to a certain weight where I felt super uncomfortable that I finally buckled down and started running or doing something like that. Otherwise, I was fine eating another cookie. Do you find that there is still a way of reaching those people that haven't hit their rock bottom and working them through a better process?
Yeah. So by the way, just so you know, I always make a joke that I think 90% of my analogies, maybe more, are all health related because they're so intertwined. The whole money and health thing, there's so many parallels. And I actually have more that I can probably get to in a minute. But yeah, so here's the thing about money and change. You had a great example of oftentimes what will create or spark change are these rock bottom moments, or I've hit the bottom, it can't get any worse. And so it's basically like all of a sudden you go, man, you have all the reason in the world to change and do something different. The problem with money and finances is those moments don't come up very often. When they do, it's usually too late. Most financial advice is more future oriented. It's not solving problems today in the here. Now, there are some that exist, right? But usually when you think about, okay, what are the detrimental let's say, what are the rock bottom scenarios? It's like, well, what's a rock bottom scenario? Probably not having enough money to be able to retire. Well, you don't usually hit that rock bottom scenario until you're ready to retire. At that point, it's too late, right? And most advice, most things that you need to do with your money, it's not less like a vitamin. More like a vitamin and less like a painkiller. So like if you're like, hey, I've got this pain in my arm, it's throbbing, I need to get rid of it. You're like, yeah, give me the medicine, I'll take it right away. It relieves that pain. Most money advice or the ways to be successful with money, they're not painkillers. It's like, hey, you have to be able to do this thing and do it in a disciplined way consistently over a long period of time to reap the benefit. So it's more like a vitamin, and vitamins are just so much harder to take. So if it's unlikely that we're going to hit rock bottom when we need to, if it's like, hey, that rock bottom doesn't happen often, when it does, it's usually too late, then yes. So the question becomes, all right, well, how can we spark change without rock bottom? The good news is, again, you go outside our industry, you look to other fields, and it's pretty clear they've got recipes and formulas and frameworks on how to change behavior. So a couple things come to mind. Number one is, for anybody that's out there that listens, maybe you're thinking to yourself, like, I have financial goals or financial things I know that I need to do and I haven't done, or you have a client who you've told them what to do or advised them what to do and they haven't done it. Just know that you're in the vast majority. We're all human beings that have where behavior change is really hard to do. And what the research shows is when they go and they ask people why they haven't done the things that they're supposed to do, the number one thing time and time again is just simply life. Or life's busy, they forgot, they didn't follow through, they didn't do the thing that they were supposed to do. It's like, just like, I'm going to leave here in a minute. Right after we're done here, I'm going to go to my kids' basketball practice. We're going to come home. We'll eat dinner as a family. My wife and I will probably watch Netflix later, and I'll wake up tomorrow and be like, oh shoot, that's right. I meant to do this thing that I haven't done yet. So just being busy and forgetfulness is the number one thing. So I think there's some, on one hand you go, okay, all right, makes me feel better. And the other side of you goes, well, it seems like a weak excuse. Anyways, but that's just, I point that out so that we know. But a couple things that help. A big thing is we just have lack of clarity. So there's a quote it's some version of, oftentimes you haven't changed your behavior because you don't have enough clarity, or lack of clarity is the primary barrier to behavior change, which means that even though we kind of know what we want to do, we're not really clear on how to do it. And my example for that is when I went to the doctor a couple of years ago, got my blood test results back. We're going through it. And he's like, everything looks good, except you've got some low B12 or low vitamin B. Like, okay, great. All right. What does that mean? The doctor's like, well, you need to take some vitamins to supplement it. Take some B12 vitamins. And I'm like, okay, great. And he's like, all right, yeah, good deal. You got low B12, take some B12 vitamins and we'll see you next year. And so I'm like, all right. So I knew what to do, right? Like the advice was there. The diagnosis was there. The prescription was there. Take B12 vitamins. But what I didn't know, I can figure this out. Don't get me wrong. But what wasn't clear was, okay, where am I going to get it from? Do I go by Walgreens on my way home to pick it up? What brand should I get? What amount should I take? Now, granted, it was probably in my file. I could go figure out what, but it was never clearly spelled out, right? It wasn't clear on how often I should take it. Is it once or twice a day? And again, I can figure these things out. Don't get me wrong. But the more clarity we can get, the more likely we are to follow through. I hadn't thought through like, well, when am I going to take it? Is this going to be something I do in the morning? Like as I'm brushing my teeth and putting my contacts in, or is it something I'm going to do at night? Because if you're not clear on these things, you get in the daily rhythms of life and you look up like I did a year later when I went back and it was like, he's like, you taking B12? I was like, no, I haven't done it yet. You know, it's not that I didn't know what to do, but clarity is a big part of it. Number two is we overestimate willpower. Willpower is never sufficient. Willpower is a really great boost and motivator, and it gets us off the seat to take some action. But the willpower that we feel as soon as we start something is never to the same degree as it is 2 weeks, 4 weeks, 6 months, a year down the line. So we always vastly overestimate our willpower and what we're capable of. But the last one, and so I guess, what do we do about that? Well, you've got to put systems in place so that you can account for the fact that you're not always going to have willpower. Like, how are you going to make sure you get up and work out on the days that you don't feel like doing it, right? And I read this the other day. Some guy said he sleeps in his workout clothes. He's like, I'm going to get up. I'm going to have them on already. My shoes are going to be right by my bed to try to eliminate the friction that goes into working out every day. So that's a great idea. Another, I know, right? I know. I thought the same thing. And I was like, I'm going to try that. I'm definitely trying it. The last one though, and I think I save it for last for a reason, because I call it the most notorious rivalry in human history. And it's the battle between our current self and our future self. Right? So we always operate in the current. We operate as our current self, right? And money advice and a lot of health advice, right, is like, you need to make a good decision today. The current self needs to make a good decision today to benefit the future self, right? So working out today is not for your current self, it's for your future self. And it's really, our current self's really, really selfish, right? It wants to maximize the day. It wants to live in the moment. It's why when I go home and I see cookies sitting on the stove, I'll eat them inevitably every time, because my current self's like, hey, you had a long day, you deserve that. My future self 10 years down the line is like, hey, enjoy those cookies, but somebody's got to do the work on this at some point, right? So there's
don't worry, we got time.
Yeah, right. That's it. That's exactly what it is. It's like, hey, the current self's like, you got time, we'll figure it out. 10 years from now is going to he'll get it taken care of. So there's a guy, he's a professor, his name is Dr. Hal Hirschfield. I've had him on the podcast. He's done a lot of research, and now he's written the book on the future self, and he talks all about this rivalry between the two. And he says that when they do the research, what they found is that we see our future selves as nothing more than a stranger. So in other words, when we think about making a decision, that right decision, whether to work out, whether to not eat the cookie, we're just as motivated to work out or avoid the cookie for our future self as we are the neighbor down the street that we've never met before. Right? And when you think about it like that, it becomes a little bit more, not convicting, but it hits a little bit differently, right? You're like, oh, well, no wonder it's so hard, because you would think that we care about our future selves, and not that we don't, right? But we see our future selves basically as a stranger. And so that's why the current self hijacks and takes over, and it's selfish in the moment. And it's like, hey, you know what? Skipping one workout, it won't matter. That one cookie, you deserve it, right? And so the more we can do to bridge the gap between our current and future self, the better we find our behavior in the present.
And do you have a method that helps people do that?
Yeah. So there's a lot of ways to do it. Number one, you can't always do it. That's why it's good to have things like how do you remove friction, right? How do you try to set up your environment to be as successful as possible? So things like going to bed with your workout clothes on, not keeping cookies in the house, because even the best intentions, the best gap between bridging the gap between the current and the future self, that's not foolproof, right? But there's a few ways to do it. The best way is to try to transport yourself into the future, to get in touch with your future self and envision with clarity who you want to be in the future. So some people go as far as to make vision boards. Some people just write it down with clarity. So an example that I always use of a client that I used to work with was he once said, he's like, I want to travel when I retire. And it's like, okay, that's good. Like 10 years from now, when you retire, that's what you want to do. But it's pretty vague, right? Like traveling in retirement. So the more vivid and clear you can get, the more connected you feel to your future self. So we started shifting it to get more clear. And what it became, instead of traveling in retirement, was we're going to go to Disney World 2 times per year. We're going to stay at the Swan and Dolphin Hotel because in that setup, they've got enough rooms where our entire family can be in the same condo apartment type complex. We're going to go visit all 4 of the parks during the day. And then we're going to come home. And since we're all in the same place at night, when we put the grandkids to bed, the kids are going to stay up and play spoons just like we did in the good old days. Right? And you go, all of a sudden, the motivation to save for retirement or to do whatever it takes to be able to retire, you're much more likely to do it, much more motivated to do it when you're envisioning that in 10 years than you are if you were to say, you know what, I want to travel when I retire. It's just a different level of motivation and connection and desire.
So becoming more specific about what that looks like.
Yeah, more specific, more clarity, more vivid. That's right.
And so you're working with advisors through some of these things and helping to how to work with their clients through these aspects and try to really understand what their clients in a more specific way want to accomplish and to get motivated.
Yeah, that's exactly right. So we just try to we try to make it as practical and applicable as possible, right? So like, what are the communication skills that you can develop and hone that build trust and connection with even a random stranger, but also your longtime clients, right? How can you tweak or improve your process to have conversations, not just around the goals that people have and they want to accomplish, but how do you turn a vague goal into a vivid vision? Or how do you go deeper? Because this is a whole nother podcast episode, but people just usually don't really even know what their goals are, or they'll say we aren't good at knowing our goals. Just we kind of throw out what we think should be a goal. And so I always tell people to focus less on what people want to do, the goal that they have, which is what they want to do, and more on why they want to do it. Like, what's the reason behind the goals? I want to retire, Brendan. I want to retire at 65. Okay, great. That's what they want to do. That's not bad. That's a good thing to uncover. Why I teach them how to go through these series of questions, right? Be curious, dive deeper. Here's how you ask questions. Well, you find out, I guess I didn't really want to retire at 65. That's just what I was always told. What I really want is to stop working so that I can spend more time and be more present with my family, because I'm 55 now. My dad died when he was 62. And my fear is I'm going to get robbed of time with my family just like he did. And you sit there and you go, okay, wait, you told me you wanted to retire at 65. What you're actually saying, what your why, not what you want to do, but why you want to do it, is you're going, hey, what I really want is to maximize the time and presence I have with my family, because I'm afraid that I'm going to get robbed of it like my dad did. And that just becomes an entirely different, number one, conversation. And number two, it takes the relationship to another level. And then number three, it actually becomes a different planning conversation. So instead of just mindlessly, aimlessly planning for retirement at 65, now we're actually getting to the core of it. What's something that they actually really want to do. And these are just things that until you become aware of them, until you know how to do it, it just doesn't come. Nobody really teaches us how to do this. So it doesn't come naturally. So that's part of an element of what I do, is say, hey, how can you do this consistently and predictably with clients, prospects, whoever it might be?
Yeah. Now, you've created a framework around this. You call it the SAFE framework. Do you want to talk a little bit about that?
Yeah. So the You always got to have an acronym, right? The acronyms help.
Yeah.
So the SAFE framework is one of those, it's a conversation framework specifically designed basically to meet an emotional client where they're at. Or, I mean, quite frankly, it's an emotional person, right? I mean, we're all human beings, just so happens that I operate in the world of money, but it's a framework to meet somebody when they're emotional in a heightened state, where they're at, to hopefully to help guide them to do the thing that they should do, that maybe their emotions are telling them that they're not going to do. And so the classic example that we see in financial advice with clients is it happens when the market's tanking, it drops, it's down 30%. And you have a client that says like, hey, I got to sell it out. I got to get out of this. I can't do it anymore. I can't stomach it. Right. And in that moment, they're not in the logical part of the brain. They're not in the critical thinking part of the brain. They're in the part of the brain that we use. It's fear-based, right? If you meet somebody in that state with logic, you're basically just running up against a brick wall over and over again. And not only is it not effective, it's detrimental to the relationship. It takes away from the trust that you've probably spent years building. So the SAFE framework is a way to think through it, to go, okay, in this state of emotion, this heightened state where I've got this emotional person, how can I approach them in a better way? Essentially, right? So it starts by saying, number one is seek first, understand. That's the S, seek first, understand. So you sit there and you go, okay, they're not in a rational, logical state, right? They're fearful. And what do they need? They don't need numbers and logic and facts. They just need a safe place to process, talk, and get reassurance. So seek first, understand goes, hey, absorb with empathy. When they call and they're fearful, don't immediately jump to, okay, we've been here before. Somebody says, I'm worried I'm not invested correctly anymore. You just say, okay, I'm curious. What do you mean you're not invested correctly? And you just try to learn more and understand where they're coming from. You'd be amazed at how often, just by giving that piece of advice, advisors will come back and say, yeah, I didn't even get to AFE, right? I just embraced with empathy, sought to understand. And the client will say something like, okay, you know what? Yeah, you know what? You're right. We're going to be okay. I just need somebody to process and talk through it with, right? But let's say that that doesn't happen. It doesn't happen all the time, right? So number two is anchor to their why. Anchor to their why means when we're in a heightened state, we tend to zoom in. We look at this in a very small scope and we go, oh my gosh, this is crashing. The market's crashing. There's no way we can recover. And so we zoom in, we get really myopic. And the idea behind anchor to your why is to get the person to zoom back out to a bigger picture view, a longer term view, by making sure they remember why they're even investing in the first place. Right. And so something you always try to remind them or re-anchor them by saying, hey, if I go back and I look or think back on our past conversations, you've told me that the reason that we have this plan, the reason you wanted to invest, is to be able to help you retire as soon as possible and to be able to secure your kids' future, or maybe secure their education, right? Has that changed? Like, no, that's still the case. And you go, okay, all right, well, if that's the case, then remember, we put together the strategy to give you the best chance of being able to retire as early as possible while still securing your kids' future. So you're just getting them to zoom back out and anchor to why they did it, to help relieve the fear in the moment. Number three is everybody's favorite. It's F, it's facts and figures. This is when you get to go in with all your favorite charts, facts, data, and stats that help drive the point home. Facts aren't unhelpful. Facts and figures and data aren't irrelevant. You just have to sequence them the right way. And so at this point, think about it. At this point, you've already made the person feel heard and understood. You've helped them zoom out to remember why they're doing what they're doing. You've effectively earned the right to reaffirm their decision with facts and data and saying, hey, they go, I feel heard and understood. You go, hey, you said that you want to be able to retire as early as possible and secure your kids' education or their future. Remember, here's why we built this portfolio, because if you can stay invested, the market's always bounced back up to this point. So you can use facts and figures to your advantage. You just have to structure and sequence them in the right place. You can't hit with that first. And then lastly, which I think is maybe just as important, you just don't always get to it, is you can ease the anxiety with action. So one of the hardest things to do when you're feeling anxious is to sit still, right? So you're like, man, I'm really fearful, but this guy is telling me that I need to stay the course and stick it out and stay invested. And that can feel really, really uncomfortable. In fact, it can make you feel more uncomfortable. Sometimes we need to act, we need to do, because action can be an antidote to anxiety.
Mm-hmm.
And so if their default action is I should sell, right? I need to get out, just to get out of the market, sell, go to cash, because that helps relieve their anxiety. Well, let's give them some alternative actions that they could pursue that gives them something to do, helps relieve the anxiety, but it's not as detrimental to their future. So examples would be, like I've heard people do things like they'll assign essentially homework on past market downturns. They'll say, okay, I hear what you're saying. I get why you want to do that. Not opposed to doing it. We can consider it. What I would challenge you to do is go back and do some research on the past 3 times that the market's dropped 30%. Let me know why it did it and what happened afterwards. And then come back to me. And if you still feel the same, then we'll have a conversation. Yeah. Another one is just like this one's always fun, but you have to have a good relationship, I think, or feel comfortable doing it, but just encourage them to play devil's advocate to themselves and go, hey, you've given me 3 reasons why the market's tanking and never coming back. Take 10 minutes, 20 minutes, come up with 3 reasons why you should stay invested, right? Let's look at it both ways. Let's make a fully informed decision. A third one would be just more financially driven actions. Like, okay, if we need to do something, let's use this as an opportunity to rebalance or tax loss harvest potentially. And then the fourth one is like, hey, if we've gotten to the point, it's like, you're still committed to selling. None of this other action oriented stuff has eased your anxiety. Then you can propose like, all right, if the best path is to sell, well, let's start by selling, not the full thing, right? But let's take a piece of it, right? And then let's also, if we're going to do that, let's map out right now the plan on when you know to get back in, right? And usually they'll sit there and they'll go, oh, you haven't thought about that. How would I know to get back in, right? And so you're just you're giving them actions that they can take to help ease the anxiety. So
it does seem like the advisor in that role in this situation or these situations is kind of like a therapist. It's a beneficial relationship to have as a client, somebody you can call that can kind of walk you through this process. Yep. Even though maybe a client could do this for themselves if you're a DIY investor or what have you, but it's good to have somebody to call and walk through that.
I mean, there are definitely people that can do it themselves. There are definitely people that don't freak out that they'll stay the course, but not everybody, right? And so sometimes you need somebody to be able to talk and process that through with. It's number one, a huge, huge opportunity to build an incredible amount of trust. Even if you already know the person, even if you already have some trust, if in their biggest moment of fear and emotion, you're absorbing it with empathy, seeking first to understand, that it builds incredible amounts of trust. Number two, it's also probably, if you can get them to avoid doing that and stay the course and stay invested, it's most likely going to be, numbers wise, financially, the most valuable thing that you'll ever do for them.
Yeah, absolutely. Do you think that there's anything that advisors can do before something happens? Like, as I think back in my earlier career, as I was talking about and doing these presentations on behavioral finance, it was paired with how to explain complicated numbers like their asset allocation and what standard deviation means and things like that, in terms of these are here's your model portfolio, and here's how we expect it to perhaps be volatile, or this is how volatile we expect it to be, which you don't really feel when you just see the number. You have to feel it when you're in the moment. But going through those scenarios ahead of time, setting expectations was the big message to advisors. Got to set the expectations for what this portfolio, how this portfolio could behave. Do you think that could stem a lot of the fear beforehand, or you're still going to come back to this process anyway?
No, I no, you're 100% right. The best thing you can do to preempt it is to set expectations beforehand, right? We're saying, if we're talking about, hey, overall client relationship, how do you help prevent? It's like this SAFE framework operates at the point where you go, hey, they're about to make a bad decision and you have to help rescue them from that or guide them through that thought process. But there are ways to avoid them ever getting there. And you just explain probably the best one, which is, hey, let's get really clear on our expectations of what to expect. In a portfolio like this, there's going to be time. We expect that the market will be down 20% once every 5 years. The market drops 10% on average. It'll drop 10% once a year. It's as common as your birthday, right? And just setting expectations to go, hey, we expect this. This is going to happen. The SAFE framework's there for when the expectation setting isn't all that somebody needs, right? And then they're still fearful, even though they're sitting there going, they told me this was going to happen. They told me this was going to happen.
Right.
But I can't help it. I need to know that
going
everything's going to
through
be
it,
okay.
Something else. Yeah. Yeah. And what you talked about, the S and the SAFE framework, seek to understand client concerns, made a lot of sense to me, because I was thinking about this too. Like, well, if I was an advisor, maybe I'd set the expectation. Let me just pull that out. And I showed you what the standard deviation could be, but you helped me understand, save the numbers till later, meet them emotionally, talk through that. Yeah. I thought that was great. That helped me understand a better process through walking somebody through a volatile time.
Yeah. No, it's one of those things. I think it helps to think like, oh, these are human beings. They are emotional. And then it's always, to me anyways, helpful to have a guide or some sort of framework to think through of how to do it effectively, but do it effectively consistently, right? Like sometimes you have these conversations with a client and you're like, man, I did a really good job of like embracing them and talking them off the ledge. And it's like, how did I do that? How do I recreate that? So I think that's why having like something you can think through or flow through is always helpful.
This is great. As we start to wrap up, I just had one question about perhaps the next generation of investors. With some younger investors, you got meme stock investing or the gamification of markets. Do you think we're going to have perhaps a different mindset or behavior to overcome, where people are constantly buying the dip, buying the hot stock, or is that just kind of still just a sliver of the market right now? And maybe their behavior changes as they get older and make more money.
Yeah, so it's a great question. And it's one where I want to have like an awesome, amazing answer. And the more I think about it, if you spend time, like any time whatsoever, looking at, researching, studying, and observing human behavior, what you learn is that there are some core tenets of human behavior that will always stay the same. Right? Like we're going to be humans. There are things that'll never change. But trying to predict what people will do and humans will do in an unknown, uncertain future environment is pretty much a loser's game. Right? It's real. Like, no, for example, it's easy to look back on it now and go, oh yeah, we probably could have seen that, like, with the fact that there is Reddit and the internet and the ability to like come together and talk and share and have the power of community. I could see how they would tank the value of a stock, right? But like, ask somebody 10 years ago and it'd be really hard to say like, oh yeah, that's possible, right? Like trying to predict human behavior in an uncertain, unknown future environment it's just really hard to do. I do think, again, that like there are core tenets of human behavior that will never change, right? Things like people always want to work with somebody that they know, like, and trust. They always want to feel heard and understood. Behavior change is always going to be hard because it's not about information. It's about execution, which comes down to discipline and willpower. And we just know that it's really hard to change your behaviors.
Do you think, we're in the age of AI now, or the beginning age of AI. Do you think there's a place there to help people manage their emotions and finance? Do you think that over time, the next generation, here I'm asking you to make a prediction again, or just to have an opinion, people will give their portfolios to an AI or an automatic kind of portfolio and not worry about it and feel comfortable with that?
I think there's definitely a world that exists now where people will hand over their money to a robo-advisor or some sort of a technology driven investment portfolio. It's really, really hard for me to imagine a world in which there's no need for the human element, right? Like technology is really good at certain things that humans aren't. And I know AI is growing, evolving, and adapting at a rate that we can barely comprehend. It's just really hard for me to imagine that technology, the computer, software, whatever, can provide the empathy and understanding that you get from another human being.
Yeah. As we start to wrap up, one of the questions I like to ask is about long-term trends, and it could be about what we talked about, but what's one long-term trend you see playing out over the next year or several years? Again, it could be about what we just talked about or an opportunity to tell me about some cool theme that you're really interested in.
Yeah, I'm biased on this, and it's related to what we just talked about, but I genuinely believe that in the next year, the next few years, both short and long term, that we're going to continue to see, along with the advancement and the proliferation of technology and AI and its capabilities, I think it's only going to start taking on and absorbing more and more of the financial technical aspect of managing money. And I think too, like we're always thinking through like, okay, how can AI make us more efficient? How can we be more efficient with our data? And I think that's the right question to ask. I think the thing we have to be careful of, though, is in our pursuit of efficiency, are we jeopardizing the human element? I think it's a question we should need to always be asking ourselves. If you're in a business where you work with other human beings, you go,
Yeah.
Is my pursuit of efficiency taking away from the human element in a time when amplifying the human element is going to be the advantage that a lot of people need in order to compete with technology?
Yeah, that makes a lot of sense. Keep the human in it.
Let's keep the humans around. Yeah.
All right. So let's do our, if you're ready, our speed round, trend or fad. I'll ask you a few different concepts and get your quick take.
Yeah.
There is no wrong answer. Buy now, pay later, trend or fad.
Trend.
Spending fasts, trend or fad.
Fad.
Buying the dip, trend or fad.
Trend.
This one is also called cash stuffing. You know that one? Envelope budgeting.
Oh. Fad.
And a last one, loud budgeting.
I'm not familiar with that one. What's loud budgeting?
That one is where you're very open about what you're spending and what you're spending on. It's a whole thing related to social media and talking about your finances and your budgeting.
I like that. And I want it to be a trend, but I'm going to go fad.
Go fad. All right. Cool. Well, this is great. Brendan, thanks so much for coming on the show and giving me your perspective and talking about behavioral finance.
Yeah. Well, thank you so much for having me. I've been looking forward to it, and boomer sooner.
I'll give you that. What's the best way for people to learn more about you, your podcast, and be able to follow what you've got going on?
Yeah, so the podcast is called The Human Side of Money. If you go to the RFG Advisory website, I write a monthly in-depth article on there for advisors. And then on our YouTube channel, I've got a video series called Wisdom and Wealth, which is for everyday investors or clients of our advisors, where we talk about the emotional and psychological behavioral aspects of money that nobody really ever tells you about. So there's a video series on there called Wisdom and Wealth. And then hang out on LinkedIn pretty much every day too. So 4 different ways.
Awesome. Again, thank you very much. And thank you for tuning in to this episode of Trends with Benefits.